NEO just raised around $3 billion by issuing 69 million new shares, which is absolutely crazy. But what does this mean for NEO as a company? And more importantly, what does this mean for you as investors? And how will this share issue affect the stock price? But before we get started, only about 15% of you are actually subscribed to the channel, which is really low. So subscribe. It's free and you can always unsubscribe later if you want. Now let's get into the video. The South China Morning Post just announced that NEO are shortly to issue around 60 million new shares, with the option to increase this to 69 million new shares, the magic number. At a current share price of around $42 a share, that's over $2.9 billion they might raise. Now, NEO won't exactly get every single penny of this cash. The offering will probably be priced at a small discount to the market rate, and obviously the big banks are going to come and swoop in and take their fees as well. So NEO will probably be left with around $2.5 billion to $2.7 billion. So let's talk about why NEO are raising capital right now and what all of this additional cash will do for the company. Currently, EV stocks are on a massive run up. Just look at what's happened to the share price of Tesla. NEO, XPeng and Li Autos have also been on a huge run up over the last few months. Therefore, it's a great time for these companies to raise capital because they'll get the most bang for their buck, if you will. They won't have to issue that many shares to get a huge payoff. Therefore, actually, NEO is being quite generous to us as the shareholders. If they wanted to raise around $3 billion back in May when the share price was around $4 a share, they would have had to issue around 690 million new shares, rather than just 69 million new shares, which would have caused massive dilution. Now this basically gives NEO a large amount of cash that they could use for a wide range of activities. They could use this money to pay down debt, as they borrowed around $1 billion from the Chinese government last year. Now this would obviously free them from the partial government control, as they'd be operating 100% under their own accord. They wouldn't have to seek approval from the Chinese government before implementing a decision. They can do whatever they want really, providing it's legal of course. Or they could use this money to invest in new infrastructure and increase the amount of battery swapping stations all over China. They could even use the money to expand their network of battery charging stations and battery swapping stations over Europe as well. This would give them a huge first mover advantage over Li Autos and XPeng, as all three of these companies are currently solely based in China. XPeng have made a few deliveries in Europe, but it's more like a handful of deliveries, whereas obviously $3 billion would allow NEO to make a massive amount of deliveries in Europe and even in the US, or implement a massive amount of battery swapping stations. This capital raise could really help NEO establish itself as one of the best and one of the biggest EV manufacturers alongside Tesla. It would also give them the capital to be able to compete overseas and to be able to get the NEO brand name out there across the world. NEO could also use this huge cash inflow to continue with their research and development, as it's still very much a neck and neck race to that coveted level 5 stage of autonomy. I've spoken in previous videos about how NEO as a company could be bigger and better than Tesla if it can beat Tesla to level 5 autonomy and increase their production capabilities. NEO can now manufacture around 120,000 vehicles per year, but wants to increase this to 150,000 and then to 300,000 vehicles a year. Whereas Tesla has just increased its production capabilities in China from around 140,000 vehicles per year to 300,000 vehicles per year. An additional $3 billion of capital would give NEO the ability to open a brand new factory and fill it with staff and machinery to boost their production capabilities and to maybe meet that 300,000 vehicle per year production numbers by the end of next year. NEO could also use this cash to expand their growing line of vehicles and add in some other kinds of vehicles as well, like maybe a truck or some machinery style vehicles like a forklift or a tractor or maybe even a motorbike, so they can expand into different industries, if you will. Having a large cash balance means that the company has a lot of liquid resources, meaning that they don't need to sell a whole bunch of cars to be able to pay for more research and development, or they don't need to sell a whole bunch of cars to be able to open a new factory. They have the cash there, ready to go right away. This is obviously very advantageous because obviously in business, cash is king. It's always better to have the money there, ready to go and to pay suppliers, rather than having to wait 30 days or 90 days or even longer to be able to get the cash in to be able to pay your suppliers. NEO is still loss making and therefore it's currently still a very real risk that the company could go bankrupt. They're obviously burning through cash a lot faster than they're getting it in. But obviously with huge cash resources it means that they can continue to invest in new technology, research and development, produce new cars and pay suppliers, and expand more and more. If you want to take advantage of this capital raising and get some shares in NEO, then be sure to sign up to free trade using my link down below in the description to get a free share worth up to £200 when you invest a minimum of £1. Yep, that's right. All you've got to do is invest £1 and you will get a free share worth up to £200. So how does a huge capital raising like this affect the NEO stock price? A huge capital raising can be seen as a lot of downward pressure, because obviously all of this money is basically raised for free as NEO don't have to pay any of it back. But the CEO and founder, William Lee, loses some of his ownership, as does everyone else that owns shares. The stock gets diluted, but he doesn't have to pay any of the money back. Obviously with a loan, the shares don't get diluted, but NEO as a company has to pay the money back with interest. Usually it's more favourable for a company to take out a loan, because even though the money has to be paid back, the shares and the ownership doesn't get diluted. If we take a look at Tesla's financial statements, we can see that Tesla has around $8.5 billion of external financing, not including vehicle and energy production financing. Issuing shares like this can be seen as a sign of weakness, as it could be suggested that the company doesn't have the cash to pay the loan back, or doesn't have the ability to make more money to pay the loan back. But a lot of companies in their infancy always raise money like this, whether it's in their seed funding round, or Series A funding, Series B, Series C, and so on. Tesla received Series A funding, Series B and Series C in 2004 to 2006. It's a great way to raise money. You don't have to pay it back, you get the money very fast, very cheaply, and you can leverage the expertise of those providing the financing. Tesla has held a total of 8 separate capital raisings in its lifetime, with its most recent capital raise only 5 days ago. Therefore I wouldn't take NEO raising capital as a sign of weakness, more something that all fast growing companies in their infancy do. But because it can be seen as a sign of weakness, it usually causes the market capitalisation and the share price to fall. If you're enjoying the video so far, be sure to drop a like down below as this really helps out my channel, and be sure to get your free share with free trade. In terms of how a capital raising affects the market capitalisation and the share price exactly, it usually causes the share price to fall, but doesn't usually cause a major impact in the market capitalisation. If Tesla is worth $570 billion and it sells off 10 shares, or it sells off 10 million more shares, it doesn't make the company worth any more or any less than $570 billion, providing obviously that there's no major issues and they're not desperate for cash or something like that. They haven't necessarily announced any new technology or any major developments or expansion plans or any massive major problems or pitfalls, or that the company is running out of cash. Just issued some shares, and therefore the market capitalisation shouldn't really be affected. But obviously, as it can be seen as a sign of weakness, it does often fall slightly. But obviously there's more shares in issue, meaning that there's more shares to divide that market capitalisation between. If there was only 1 billion shares in issue of Tesla, then each share would be worth around $570 each. But obviously all of a sudden, if there's 2 billion shares in issue, then it's still worth 570 billion in total, but that's then divided by 2 billion shares, meaning they're worth half of that each, so around $285-ish per share. Therefore, even though NEO hasn't done anything bad by issuing more shares, the share price has to fall because obviously the market capitalisation is divided between more shares. The share price and the market cap then tends to increase a short while after, as obviously NEO can use this cash and implement it and announce some good news, maybe say like a new factory or some new vehicles being released. Do I think that NEO capital raising is something you should be worried about? No, not really. It's something all companies do. Tesla has done 8 capital raisings. Yes, the share price has gone down, but that's what stocks do. The share prices always go up and they always go down. That's what happens in the stock market. In the long term, the capital raising will be great for NEO, as it gives them a huge amount of cash to implement into research and development, new factories, loan paydowns, and just general operating purposes. If you're a long-term trader, this is great news. Just hold on to the ride and watch the stock price run up even further. If you're a short-term trader, it might not be the best news because obviously the stock price is going to fall in the short term and then increase further over the next few months and the next few years. As always guys, if you've enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell because that way you'll be alerted when I upload a new video. Cheers!